If you own a restaurant, a bar, a convenience store, a market, or a retail business in California, your California sales tax audit may be far more dangerous than you originally thought, or even your representative. Because the CDTFA does not have to accept your reported gross receipt, especially because your point-of-sale system says they're correct. That's not enough. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and I'm the owner of the tax law offices of David W. Klasing. We have over a dozen offices across California to serve you. In a cash-intensive audit, the CDTFA may review your sales tax returns, your daily cash worksheets, your point-of-sale reports, your Z-tapes, your bank statements, your merchant processor reports, purchase invoices, and your federal income tax returns. The goal here is to determine whether your reported sales match the underlying source data. So why is point-of-sale data so critical here? Point-of-sale records can be your strongest defense, but only if they're complete, preserved, and properly reconciled. Missing transaction details, deleted void logs, excessive cash payouts, and inconsistencies with bank deposits can lead the CDTFA to reject your books entirely, and the courts will back them up if they do it. They use indirect methods that can inflate your tax liability. If the CDTFA does not trust your records, it's going to resort to indirect methods such as observation tests, markup tests, and bank deposit analysis. These methods rely on assumptions, and if those assumptions are wrong, the projected sales tax liability can be grossly overstated, and we see that all the time. Restaurants and retail organizations create additional complications. Auditors may examine tax-included pricing, happy hour discounts, comps and coupons, employee meals, marketplace sales, returns and gift cards, and exempted sales. If an auditor miscategories or misclassifies any of these adjustments, the audit results can be highly distorted. California generally requires sales tax records to be kept for at least 4 tax years. If your point-of-sale system overwrites data, you are responsible for preserving that information before it disappears. Third-party software providers do not relieve you of that responsibility. So when can a civil sales tax audit turn criminal? Well, admittedly, most CDTFA audits begin as straight-up civil matters, but the risk of criminal prosecution increases dramatically if the auditors find deleted cash sales, altered Z-tapes, off-book transactions, sales suppression software like Zapper programs, or if you give false explanations during the audit. At that point, the case can shift from gross receipts verification to fraud and criminal tax exposure. If the CDTFA is testing your cash sales, your point-of-sale data, or gross receipts, you should act quickly. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help businesses reconstruct records, challenge unsupported projections, and defend against civil and criminal tax exposure in sales tax audits. Call 1-800-681-1295 or visit klasing-associates.com to schedule a confidential reduced rate initial consultation today. To date, we have never had a sales tax audit client that we represented prosecuted for California tax crimes.